Good morning. Certainly does, Alex. We'll see which way things go here. All right, let's take a look at the charts. I see Qs are right there, man. Yeah, we'll see what happens. Mm, Okay. So things are just hanging here. They're gapping down. Why? I think a little extended. Prices moved up from bottoming tail bar, which back on that day we talked about, is this a low? Clearly, that was a low bar, range expansion bar after several bars down. And what was surprising to me anyway, the market surprises me, I guess, pretty much every day in some way. Um, when you see patterns like this on a daily chart, lower time frames are in downtrends. And from there, we go to the 65-minute chart. And if I scroll this over or put it over here on this one, you can see how it's just lower highs and lower lows. And here was the bottoming tail bar, and then it gapped up that day and it hung on and started this move up. So now prices have reached an area of resistance after puncturing through those pivot highs, and they're gone sideways. They're consolidating the gain. So it would suggest, especially where they're opening right now, if I go back to this chart or the 5-minute chart, and they've got room to fall. And you can see that right now they're down at yesterday's low. Room to fall, meaning this sideways movement, big mess that was going on. The next stopping point theoretically would be down here, which is that prior day's low, and where I have the green line. Now, when the market opens, we'll be looking for patterns that would support that. Some kind of upside failure, any kind of a pattern that would support a short. However, as we look at other markets, and you can see the cues here after the semiconductors, that NVIDIA news upset the apple cart there. And you've got this, you can see this like head and shoulders top. I'll draw it out for you. And you can see, but this is with overnight data as well. But it is what it is. And we take a look at it on, let's get rid of this. Let's take a look at it without the overnight data. And we already have an upside shakeout. And prices, they're down here. And this is pretty bearish too. I mean, when I say bearish, I mean that from the point of view of the potential for it to move under these lows because of the gap up and 3 days of sideways consolidation. So underneath that, not this minor support there intraday that was inside of this bar. So as we expand data, we can see more detail, whereas, wide range bar, can't see anything in there unless you look at the intraday chart. But there is an area of minor support here, and prices gapped up through it. So that certainly could come into play and it'd be worthwhile, just, around 614-ish, 15-ish, that minor support. We'll see if that holds. One of the things to be looking for, open interest in the Qs and puts and calls. See where there's a large open interest, and maybe that would support that there's a large open interest in put options at that level. See where the bearish bets are. Let me go back to, you can see the rejection there overnight. I guess that's real. I don't know. Maybe it's not. That looks like a bad tick, but that is real. Looks like, and then back down, and it's inching down under the lows right now. Markets have been pretty whippy. Q spiders, futures first thing in the morning. So there's that minor support level right there. We'll see how far it gets. But it is gapping down on top of all of those bars lows there. So that is bearish. IWM certainly hanging on a thread also. We're actually moving a little bit lower. You can see it's right down there in this unfilled gap. And after getting rejected yesterday and at this level, that will be one to see if it holds or not. So looking at these charts, it's like they are all to varying degrees in alignment to go down. Now, looking all the way down here, markets are sideways or up. What's going to cause them to do that? Well, a lot more selling than buyers showing up. But news-wise, the government reopened. Maybe some data starts trickling out. That can move the market. So there's the potential for whipsaws or one way or another. Be aware, maybe around 10 o'clock. We'll see what might happen or not. The markets are waiting. Institutions, all these economists, they're just waiting for this data to come out just so they can start working again and giving their predictions, which are typically wrong. Anyway, this has plenty of room to move down. IWM has been the super mover, taking out that high, new all-time highs. And this is the Dow anyway. This is up there, but I think the Dow was up above there, 48,000. So this is the idea. It's a concept we call a greater than 100% retracement. Historically, when you get a greater than 100% retracement, prices stall, and prices are stalling. Right? So this is likely to pull back in unison. And then overnight data, the way this moved up, the white area moved up, there's a void below. And so we look at the diamonds and then go over here. You can see this has plenty of room to fall, but let's be objective. Minor resistance. There's an unfilled gap down there. Wide range bar moving up. That suggested that the move was near its end. Wide range bar after multiple bars moving up. And so far, momentum is stalled. So it's not a big deal. We'll see how this reacts on the pullback, the depth of retracement. Again, there's that unfilled gap down there to fill in. Just eyeballing. If you go to here, 50%, somewhere around here, and a congestion area. All right, let's go back and we look at SPX. All right, so SPY, we have to go over here. Let me look at the 5-minute beginning. Drop there, 60, 180. These numbers have probably moved since I just put them in. But when things start to move like this, unless something comes out, news, to turn things around, most of the times it's going to go down here. It's going to keep dropping until it reaches an area where the buyers are going to be more comfortable stepping in. All right. And so below yesterday's low, on top of the previous bar's opening price, that green bar's opening price, 680, give or take. And so here, 6,800 will come into play as a whole number. Without even looking at it, I just know whole numbers have a large open interest. So I would keep an eye on that. And it's pretty close. See the low right there? That's the targeted area. So this is an area. Like every time we look at something, it's an area, which means it could easily poke below 6,800, maybe come down to that next one at 6,750, 50-ish, give or take. You see the number on the cursor. That's a hell of a long way down. I don't think so. I think pretty much this area would be the high probability place to to at least consider that prices are going to stop moving down and begin to stabilize and possibly retrace. So let me just double check these numbers. Yeah, because they definitely move down a little bit as the markets move down. They do move fast. 68.80 coming down. And they could increase. So average true range over the past 5 days, 77. And you could see the prior 2 days ranges around 40 to 50. So knowing that it's opening down here, you look at where the put strike is, prices are falling. Can they get down here? Probably not. Can they back up, get up there from where they are at? Probably not. And that's what, when we look at these extremes, we look at where prices are at and have a educated, objective assumption as to where prices may or may not go based on that. And then intraday, you see, do they get closer to those numbers where they're probably not going to go, and then watch for stabilization in a smaller time frame. Okay. Our other markets, gold, I've been on a tear, and you can see it's beginning to stall here. A little bit of profit taking. It's up a bunch of days in a row, so that's pretty normal. Silver backing off. The same idea, greater than 100% retracement. So anytime you see that in the time frame that you're trading in, it could be a 5-minute chart if you're an intraday trader. It's pretty much common sense. Prices are down here and they move all the way back up to a prior high and take it out. Common sense says it's likely to stall. It doesn't mean short it. That means don't buy it up there. If you're long, take some money off the table. Sell some covered calls if you want to hold on to whatever it might be. Oil had a big whipsaw, big nasty down day. It had that nice move up, and it was kind of like not exactly a bull flag, but this being what would you interpret as a flag pole, ideally if it was breaking out of a range versus coming up to resistance, and then a downward sloping correction that would have raked to the upside. Well, yesterday it broke to the downside. So it's just another example of a big mess that's now retracing a little bit. It's not expected to double bottom retest buy setup. When is the first retracement is steep? So he's asking me, it's not expected to double bottom retest buy setup when the first retracement is steep. So let me interpret that. I'm sorry I didn't see that post, but the idea behind a W bottom or a retest type of a bottom, it's unexpected, right? Unexpected that it would work as a good entry point other than possibly a scalp when it first drops from a point. Now here, you can see on the futures, that's a really sharp drop. It's one day, right? Now, from a day trader point of view, pivot, another pivot, downside momentum is slowing. To think that you could scalp this on the long side is a reasonable thought. And you could go down to a 5-minute chart. Now, if something is, I'm sorry, I don't know when you posted that, what I was looking at. You could retype it if you want, but if something is rolling over, let's say we're looking at the Qs or the Russell, with a pattern like this, where it's been going sideways and it starts to break down from here, you would think the first retest would not work. It wouldn't be a high probability setup. However, what if it's down here into this larger green area and it falls that far? Just associate the same chart we were looking at crude oil with something like that, 65-minute chart, where it drops down multiple bars in a row down into support. I'm going to be thinking long. And then I'm going to go to my 5-minute chart and I'm going to look for a pattern like crude oil, something like that, where it begins a pivot low, next pivot low is closer together. It's creating support. And so the idea of a counter trend move makes sense to now go to your smaller time frame and looking for entry points. I explain all of this in the new course that I just finished. Please consider it. I mean, if you want detailed review of intraday, multiple time frames, candlesticks, relative strength and weakness, put a lot of time into that. And so far, everybody loves it. All right, let's continue so I can hand it over to Dan. Uh, Interest rates are all over the place with the government reopening, waiting for the data to come. And yeah, you can see semiconductors. Yesterday, financials were on fire. And so KRE gave it up. They were moving up and they gave it up. And then XLF, that's reached a pretty stiff area of resistance. So without semiconductors and financials, I think it's either lower or just more of a mess. All yours, Dan.
You're leaving the mess to me?
Why not?
All right, I'll take it. So yesterday we were talking about that Climo on the diamonds as a day trade and call spread idea. And every day we have a bias before we leave the green room. And so we said, well, that's pre-market. I've been saying up 3-4 bars at resistance, there's no way we'd be trading this without a continuation pattern. But we also talked about the Qs if they took out the red bar. So even though this pattern, I'd been saying I would love to get 2-3 nice controlled pullback bars. If this took out yesterday's high today, I think it would be a 6-iron to fill that gap. So I did post a put spread over yesterday's high, but not gonna hit. And the government's open, so that's giving us no boost whatsoever. Let's look at alarms like always. Walmart. I've been watching this for a couple of days. I'm not crazy about the reward the risk for a swing, but what's today? Thursday. So Tuesday's high. Day trade, ideally maybe 30-minute high. But my alarm went off. Let me reset it a little higher here. 103.72. Coco, Sam's girlfriend, Coco. I posted breakout after bottoming tail. Void. See that's a void. Fluid bars down. There's no overlapping bars, no congestion. Got a flat 20 into a rising 50. Closing breakout. Looks great. So let me Cisco here. All right, so I'll watch that and adjust the entry if it gaps over the entry. ATI, I gave as a put spread also. Igniting earnings pullback. Here's our something bar. New low reversal. Chopping sideways, gapping up. Looks great. Rainer to air. I had an up alarm here, but I can't. I don't know if that's real or not. Dollar Tree. This actually got a downgrade, so all right. It's not hitting the stop, but my early alarm went off. Let me reset it. I think it was Goldman downgraded it. I think that's it on alarms. BNS. Yeah, we're in this, but that's an alarm from yesterday. A region here, up alarm. We're in trail mode. My 690 alarm went off. Looks great. We're in trail mode. Alex mentioned Paul, Palladium. Yeah, we nailed this thing. I forget exactly where. I think it was yeah, right here on this gap up. 922 is when we gave it to subscribers. But we ended up deleting it from the spreadsheet because, I'm not sure if people bought it for that big gap. But, my first target was 1.25. Second was 150. Because look at the weekly and monthly. But now it's a new setup. It's kind of trading like this long consolidation with gold and silver. So it's at the top of this range. It's gapping down, which is good. Ideally, it'll chop around for a week, and then we'll get a new entry. Yeah, we're in GDX and the ETF letter also. We're in XLV. Those are all doing great. Look at that. Hey, remember one of you said yesterday about SanDisk? Remember you said there's no stopping these things? And that was an accurate statement at the time. But now look, we're getting a crack in the armor. It's actually not that big on the daily, but 30 minute low. No, but I agreed with you, Patrick. I agreed with you. I just said it was a true statement. But when the bigger time frames do this, there is 100%. Well, only Alex says 100%. There's 99% chance that this will retrace someday. I just don't know when. I don't know when. But stocks don't go vertical like that on a weekly from $45 to 283 without pulling back. So this thing could have a huge pullback. And so I put the two cousins there. Put this in a window, SanDisk. So these are all, since the gap's not huge yet, I'll be favoring call spread. And then maybe 30-minute low, start nibbling in shorts. I'll tell you when I see it. STX 273. Yeah, every one of these are call spread ideas, so I'll be looking at that. Avco, I have an alarm. If this takes out Thursday's high, beautiful pattern. It's gapping down, so I doubt it will. And Macy's is on the left. Coming in though, it hasn't triggered. That GDS was a short from yesterday, I mentioned. But shoot, now it's gapping down 60 cents. Let's wait for a bounce. Well, I'll keep an eye on that. When to short it, let's go to earnings now. I deleted a bunch already. Cisco, I said excessive gap. It's a bullish gap. Man, look at the volume into earnings. Do you think somebody knew something? See, that's a picture of, and the Qs did nothing yesterday, right? That's a picture of somebody knew something. If the SEC wants to do their job, they should write a letter to everybody who, bought over 1,000 shares and the corresponding bullish bets and options. But tomorrow's Friday, so let's keep an eye on one DTE call spreads. UAMI, I have an alarm up here at 790. This is a beautiful pattern if it breaks out, but it's gapping down, so nothing to do. Let's toss another silver stock. We know about that sector. 465. This was a bullish pattern. It needs to rebuild the low bearish gap to this prior low. Let's come back to it. This is a penny stock, but if you like trading penny stocks, it's a nice pattern over yesterday's high, and it's a gold corp, so good sector. It's, whenever you see 4 decimal points, it's a over-the-counter stock, which its nature is they're higher risk because they don't qualify to trade on NASDAQ, so there's more like games being played. 314. What 221? That's a sell setup, but that's pretty big cap down. So if I was looking at it earlier, if it were at 230, then you got plenty of room to fall. But it fell another $8 already. T-Tech, $35. Gap's too big. What the heck is this? Yeah, it's a Climo. I'll set an alarm at 8:50. And it looks like I already did. KLC, that's a nasty gap. Kinder Care Learning. Kinder Care. Those things, they're little playgrounds, kids, schools, but stock looks horrible. Maybe they're going out of business. Gap's too big, but that was a bullish close. Aqua I'll set an alarm at $8. Bottoming pattern. 1 month. ALH alarm. Nope, this was earnings. Look at that, a gap to all-time highs. Alliance Laundry. Growl has to get over yesterday's high. Hey, Mercy, Sam, that's yours. Mercy alarm. Well, it's early alarm, but that's a short watch. This thing getting killed looks horrible. What is that? Webtoon Entertainment. That's a nasty gap. Look at that thing. Look at that gap under those 2 big green bars. Shoot, SanDisk, bottom right. Today's the day, you all, for call spreads on these things. Told you. Else.
Coco, right, 5-minute high.
Yeah. I agree. All right. Coco, or what's wrong with pullback other than the Qs and spiders looking lower? So that's always a judgment call.
On Coco?
Yeah, why not the gap fill?
If it goes there.
All right. But sometimes we get burned in the gap fill because then it keeps going lower.
Well, I don't think you meant just putting a bid there, but if you did,
Good.
you could wait for a 5-minute green bar.
All right. All right. There's nothing to 5 minutes. Alex, don't be talking about Sam's girlfriend, man. Right, lack, I had an alarm at $5. This could be a nice 30-minute high. Let me put black here, little bottom fisher. Um, all right, back to SanDisk. Tomorrow, 285. The spreads, man, $1.10 by 250. It's juicy though. To be 285s is very juicy. The 290s even have a bit of a dollar. Let me see. Yeah, the friggin' spreads. The 290s, 290. Um, 50, that one's weaker. I would do the 170s on this. 50 by 151. Man, they are screwing us on these spreads on these three. Well, this one I didn't look yet. $295. I remember this stock clear as day at $40. And now it is was 295 yesterday. 290s, 45 by 165. Man, they must have the same freaking jerk market maker on all three of these stocks. All right, Cisco I mentioned, but it's probably too late. But let me see what the 80s are. Yeah, Reiner Air did get up. Let me change the stuff. Cisco 80 for tomorrow. 20 cents. Reiner Air, let's move stock here now. 64.87. And the titter. Buyer's cues. Let's gotta be patient here because they are bearish hourlies, particularly the Qs. It's actually the Qs are in, well, it's not an island, but it's just a bearish gap breakdown on the hourly Qs. There.
spiders are on that pivot we looked at pre-market.
Yeah, spiders have support on the hourly, the cues don't. But titter. Monaco. It could be an exhaustion gap of at a bare minimum. I'd wait for a 15-minute reversal. But yeah, he got his head clocked pretty good. CNO. I'll put it in the window. Hey, CNO, I was watching. Sam, was that yours? And I looked at the $40 puts. There was nothing. Let's see, M bottoming pattern, but not doing it now. Set an alarm.
Short you down below the 5-minute low. Put a stop above 119.50.
Yeah, let me check on DTE on this. 121s. Oh, that's Utah. Let me just go to diamonds. 45. 60 cents is all. Taking up. Right, black. I'll set a new alarm. 514. 512. Hey, Trex, we gotta keep an eye on that Q's put spread when we get a reversion. G.
Still looks like it's going to take out the low of the day here. 5-minute low.
Yeah, no, there's play the hourly is just clear air to go lower.
Yep. Here we go.
That SanDisk, remember when I said it was 92 cents? It's 37 now. But it was spreading. Apple up alarm? Man, I gave that as a put spread. Wow, that shocked me. And I looked up and yeah, that's the only thing ripping.